what we specialize in is helping homeowners understand how reverse mortgages work, and also if it might be a good benefit for you. So today what we'll do is go through the reverse mortgage basics. We'll talk about some of the myths and misconceptions that they have about reverse mortgages, and then go over some pros and cons to help you determine if a reverse mortgage might be an option for you or maybe someone you know. Okay? Just a little bit about Tatiana and myself. I started in the finance industry in 1990, about 35 years ago, after being in the military at the United States Navy for 6 years. I started, after that, I went on to Nissan Corporation. If any of you guys grew up in the LA area or was in the LA area, they had that Nissan building in Carson. Well, I started as a credit checker there myself. And eventually I moved on to Transamerica Financial. Started from the bottom there, went through processing, collections, underwriting, and eventually went out in the field and sales. For Tatiana, she started right out of high school with me, and she's been doing it now for 14 years. And one of the great things about this young lady is that by the time she was 20, she was already helping homeowners with real estate and mortgages and got her license by that time. So I'm really proud of her, just a dad moment. So enough about us. What we're going to do is go over the basics of reverse mortgages, and then if you have any questions for us, we'll have plenty of time afterwards for answering questions that you might have. What are reverse mortgages? But I have some information here from a study that we conducted about 2 years ago. I'm just going to give you some information, and this may not pertain exactly to you, but it may be many people that we know, because retirees are living a lot longer than they used to. Okay, so here's some statistics. Maybe it's familiar. 88% of retirees want to stay in their current home, and more than 3/4 of them plan to live in their homes throughout their retirement. Okay, but over 60% of them have less than $200,000 in retirement savings. So that dream of living in their retirement home for the rest of their life is really difficult, if not impossible. Now, this is where reverse mortgages come in, and you just heard the story from Connie, where a reverse mortgage basically can eliminate your monthly mortgage payment, which instantly frees up cash flow, which can help you take care of some of those daily bills, payments, medicines, any of those things that help you be able to stay in your home while you retire. Okay, so that's the reason why reverse mortgages have become so much more popular and viable as a retirement option these days. Okay, so that's the why. Let's talk about what is a reverse mortgage. Well, a reverse mortgage is basically a lending instrument where lenders pay you monthly or in a lump sum disbursement or line of credit based on the equity in your property. Okay, you're not required to make monthly mortgage payments, which gives you instant cash flow. The loan is only repaid when you sell, move, or pass away. Okay, very simple. Or refinance the home, so you still keep control of your property and you can still do what you want with it. Now, who qualifies for a reverse mortgage? And you can already see just from the age requirements that a lot of people don't qualify. Okay, so you can be 55 or 62 plus depending on the program. 55 plus for private reverse mortgages, and there's a lot of those out there right now. 62 plus if you're going with the Department of Housing and Urban Development, or FHA's Home Equity Conversion Mortgage, or HECM. Okay, you must live in the primary residence, and the home must have sufficient equity to be able to pay out those disbursements. And many people, once we get to our ages, we've been in our homes quite a while now, and they build up quite a bit of equity. And you can see the appreciation that's happening with properties right now. And you must be able to pay for ongoing property charges. Okay, now that would mean you still have to pay for your taxes, homeowners insurance, flood insurance, homeowners association dues you might have here, and so on. But if you're able to fit that right there, generally you're able to qualify for a reverse mortgage. But then there's the matter of, is it right for you, right? Okay. How does a reverse mortgage work? Well, like I said, the lender makes payments to you. You guys see over there? Okay. But you retain ownership and title. Okay. This is very important because this is one of the misconceptions we hear all the time. You retain ownership and you get to do with your property what you want. Okay? The loan balance will increase over time with those disbursements. However, you do have a choice of making payments if you like. It's not required, okay? But you do have that option. If not, the loan balance will increase over time, but you do have flexibility in how you receive your funds. Okay, one of the best benefits about this program, you can receive your funds in either monthly payments, you can get a lump sum disbursement, or you can get a line of credit. Okay, that actually increases over time with appreciation on your property. You don't have to use it. And if you use the line of credit, you don't have to pay it back, okay, until such time when it is required, when you either sell, leave your home permanently, or pass away, okay? Okay, and again, you're going to hear this, you're going to see this a lot. You are responsible for ongoing property damage charges. The reason that's there often is because that is one of the main reasons under a reverse mortgage that you could go into default or go into foreclosure. Not by missing payments, but not taking care of property charges like that. Now, some of the benefits of a reverse mortgage that you've already heard is there's no required monthly payment. Okay, now that instantly increases your cash flow. So if you're making a monthly mortgage payment of $2,000 or so, and that goes away, you can definitely see how that can help you with groceries, home repairs, medicines, or what have you. Okay, using that money however you want. The funds are generally tax-free. And I say generally because in my experience, the funds that you receive in a reverse mortgage have been tax-free, but depending on your area, you'd want to talk to your tax advisor, which I am not, okay, just to be sure. And you can use those funds again however you want. That can be from home improvement, that could be buying a car, that could be consolidating bills, it could be taking a trip, okay? It could be anything that you would want to do with your funds. One great benefit of reverse mortgages, though, that's becoming more popular, and why it's becoming more popular, especially for even wealthy retirees, is that it can help preserve other retirement assets that you might have. So if you have a stock portfolio or something like that, and maybe the returns aren't the best at that time, you may not have to take funds from your retirement portfolio for your basic living expenses. You can use that tax-free income from a reverse mortgage, leaving your stock portfolio in place to get your maximum returns. Okay? So a great benefit right there. And again, of course, the increased cash flow from not having a monthly mortgage payment. Now, even with all of that said, there are still some responsibilities that you have as a homeowner in a reverse mortgage contract. Okay? You must live in the home with a reverse mortgage. You must live in that primary home. It doesn't mean you can't have other property, but the home with the reverse mortgage, they require that you stay in that property right there. Now, it doesn't mean you can't take a trip. You can even be gone for a few months, but there is some requirements. And I won't get into the details, but normally it's between 6 to 12 months, depending on your situation with that. So that's important. You must pay all the property charges like we talked about. Now, we said taxes, homeowners association dues, flood insurance, it could be HOAs, it could be anything that's attached to that property. Now, I'll tell you right now, with the HECM, the FHA version, there are some provisions to help you with that if you are unable to do it yourself. But that would take away some of the equity that you would have that would go to you. Okay, so really important right there. And the home must be maintained in good condition. Now, of course, you'd want it in good condition because you're living in the home, okay, for your quality of life. But also, it is collateral for the lender. And the way they're seeing is that at a future time, you're going to either be selling that home or they're going to be taking that home, and they want it to be in the best value possible. When is a reverse mortgage repaid? And this is how it's different than a forward mortgage right here. Very simple, pretty simple to qualify for, but for it to be repaid, it's either you sell the home, okay, or refinance it. Either way, you're paying back the balance. You move out permanently, and this could be a person getting sick who has to go live with relatives. This could be a person who has to go to the hospital, or any situation like that. Now, there's details of that. Usually, it's between 6 to 12 months. Okay, depending on the person's situation, because you could go to a hospital, for example, for a few months and then come back, and maybe everything's fine. Okay, so this is where you definitely want to be in contact with your lender so that they know that you're intending to stay in the property, so it doesn't start a default or process where they're looking for the balance to be paid off. And then obviously, last situation is when you pass away. And in that situation, this is where you want to talk to your family. Okay, this is where a living trust, a will, and possibly even some insurance would be important, because if you're intending to pass that property down to your heirs or anyone that you care about, this is where that would be important. Okay, matter of fact, just talked to a person about that just earlier. So these are the situations where you would actually pay back that reverse mortgage. Not like a forward mortgage, it doesn't have to necessarily be 30 years or anything like that right there, but when you sell the home or refinance, move out permanently, or pass away is when it's repaid. Let's talk about some of the common misconceptions that we often hear when they bring up a reverse mortgage. And I was the same myself. My first reverse mortgage was about 19 years ago, about the time I met you, and it was my best friend's mother who lived on the street where we grew up. Okay, she was trying to get a home equity loan, and I won't mention the lender's name. It's a bank that's very popular, but she didn't have the income for it. But instead of letting her know that up front, they charged her for an appraisal. Then came back and told her that her debt to income ratio was too high, and then it left her in the lurch. You understand? So we were able to work out. This is how I found out about reverse mortgages, a program that could help her, and she was able to do that. She was able to get repairs done on her home. She paid off some of her bills, and she didn't get a lump sum or a monthly payment, but she got a line of credit, and she still has that reverse mortgage to this day. Okay, yep, into her 90s now. Exactly. So I just wanted to let you know, but there's plenty of misconceptions, and I even had them myself. One of the big ones is that the bank takes ownership of your home. Okay, that is not true. You have full ownership of that home, and once you take out that reverse mortgage, you could improve it, you could sell it, you can do whatever you want to. Okay, up to the point, as long as you are living in you pay attention to those requirements of living in that home. But it's your home; they do not take it away from you. Okay, when you pass away with a living trust or will and insurance, possibly if you need it, it can stay in your family. You can pass it down. Another misconception is that you'll owe more than what the home is worth, and basically I can understand how that might happen. The loan is going to increase, so at some point it may be higher than what their value of your home would be. Okay, well, there's an awesome feature with reverse mortgages. Then FHA's version has it, and most of the private mortgages have them too. It's called a non-recourse loan feature. Okay, that simply means that you will never owe more than what that property is worth, even if the value goes down. Okay, so basically it's like this. You get the reverse mortgage, you've had it for 20 years, it's gone up to $600,000. Okay, in the meantime, the value of your property is also rising, but it didn't rise as high as that. Say it's $500,000. Okay, so one of those situations comes about that you either sell, move from your home, or pass away. Okay, at that time, when you have to pay for that loan, you will never owe more than what that property is worth. So if it's worth $500,000 at that time, that's all you're paying. Okay, and the lender cannot come after your heirs, come after your assets, or anything like that. That is what it is right there. Usually the reason for that is because the lender will have some type of mortgage insurance to help pay for an occurrence like that. Okay, but you never have to worry about paying more than what the home is worth, or having the lender go after your heirs or any of your other assets to take care of that. Okay, very important. Other is that you can't leave the home to the kids. But like I said, you own the home. You can do whatever you want. You can leave the home to your kids or anyone else that you deem was important to do that for. And then the last one here, that this is changing rapidly, and that's why I was talking about it earlier, is that reverse mortgages are only for people in financial trouble. And that's why I brought up those statistics. Now, retirees are living longer. Okay, they're just plainly living longer, and a lot of times they outlive their retirement income or their retirement savings. Okay, so there's a lot of people out there, a lot of retirees who are what they call house rich and cash poor. Okay, and a reverse mortgage can take care of this. We have found that many wealthy people are taking advantage of reverse mortgages. The reason is because they have a stock portfolio, they have a lot of investments, and they'd rather not pull from that. They're smart, they don't want to pull from that. So they'll use a reverse mortgage that's tax-free, that's not required to be paid back. And in the short term, they use that while leaving their investment portfolios in place. Okay, they even have jumbo reverse mortgages for some of these people who want to get their dream home. So instead of downsizing, some of these people are upsizing and not having a mortgage payment. Okay, so reverse mortgages are only for people in financial trouble. Definitely not true. Reverse mortgages, I would say, are for people who want to have increased cash flow, who want to improve the quality of their life. And then they may not have a stock portfolio, but they do have that house. Even with all of that said, okay, the reason that most people end up talking to me is that they want to know if a reverse mortgage is right for them. And as much as I talked about those benefits before and how it can help you, there's some situations where a reverse mortgage may not be good for you or may not be good for you at this time. So it may not be the right time for you. So if you plan to sell your home soon, okay, why go through the expense and time of a reverse mortgage? Okay, go ahead and sell your home, and maybe you can get the reverse mortgage on the new home. And I'll give you a little detail about that. If you are unable to maintain the home, and as we get older, it gets a little harder to do that. Maybe we don't have people to help us take care of it. I would say if that's the case, now would not be a good time to get a reverse mortgage unless the reverse mortgage helps you solve that problem. Okay, very important. If you're having major health issues, if you're in and out of the hospital, if you end up having to stay with your kids or be in long-term care, then it may not be as good a fit. You know, you may want another option instead of going through the time and expense of a reverse mortgage and then having it called due because you can no longer stay in that property. Okay, that's another reason. And if you're unable to pay ongoing property charges, those taxes, homeowners association dues, insurance and stuff like that, all of those, even with a forward or traditional mortgage, you can be called into default for not paying them. Same thing for a reverse mortgage. So if that reverse mortgage doesn't help you take care of that issue of paying your ongoing property charges, you may want to wait for taking out a reverse mortgage. It's definitely not for everybody, but a good many people, it definitely helps them live out their retirement in their own home. So we mentioned about reverse mortgages are not just for people who are in financial trouble. In fact, you can actually get a reverse mortgage for purchase. Okay, now there are some private mortgages available, but I'm going to talk about FHA's home equity conversion mortgage. That's the one that's most popular, by the way. So basically, what would happen, you have no monthly mortgage payment. You can only use primary homes. In other words, you'll have to live in that home. However, just like with FHA's forward program or traditional program, you can get up to 4 units on that property. You actually can get a reverse mortgage, not have a monthly mortgage payment, and probably rent out some of those units. Okay? Just something to think about. You can keep your previous home if you're able to maintain it. Basically, you would have to document that you financially can take care of the previous home that you have. So it's not like you have to give up your previous home. Many times people will sell it, but you don't have to if you can prove that you're able to maintain it. And yes, there is a cash investment required on that. So basically, in most cases, how it would work is that, I'll use myself. I'm 61 now. My children have moved out, work, school, and so on. We have a 2-story house that is a little bit more room that we actually need or want to maintain. I want to move out. I want to get into a more comfortable home. So I sell my home that I've been in for years, got quite a bit of equity built up. I get the cash from that sale, and then I go find a home that is more comfortable for me, easier to maintain, a smaller home, a lower price target. I'll put a significant amount of cash down based on that reverse mortgage requirement, depending on your age, okay? And then basically what will happen is that you'll have the reverse mortgage for the remaining part of the price. And so here's your situation. You've acquired a more comfortable home. You have no monthly mortgage payment. And because you sold that previous home, now you have some extra cash left over too. So you have some increased savings from selling that home. You have no monthly mortgage payment and a home that's easier to maintain. Okay? Could be a really good situation for many, many people. What are the next steps? So now that I've blown you away with this reverse mortgage presentation, and you want to go ahead and remove your monthly mortgage payment and get that increased cash flow, it's like, sign me up, sign me up. One of the great features of reverse mortgages, and I want to say all reverse mortgages, is that even though you want to come and right now and apply with me and go ahead and sign up, I'd have to put the brakes on you. Okay, because what's required before you actually get started is an independent reverse mortgage counseling session. It's required for all reverse mortgages. I think it's a great protection because it allows you the time, after talking to maybe a loan officer or something like that, to get the pros and cons of how a reverse mortgage works. Okay? And you can bring your heirs, you can bring caregivers, friends, whoever, so you can all ask these questions, get a real independent look of how they work before you actually get started. Okay? Really important. What I would do, so how it would actually work is this. We would have a consultation. Okay? I'd sit down. Usually we give you 2 or 3 different plans based on your profile of what could work for you. Okay? We would give you a pre-counseling package, which would include those options, and also a list of nonprofit agencies that that offer independent reverse mortgage counseling services. I am not allowed to choose that independent counseling service, and also the counselor cannot steer you toward a particular mortgage company or lending program. Very important. They're there to solely just give you good information about reverse mortgages and help you decide if it's something you want to do. Okay? So say you still want to do it, you still definitely want to remove that mortgage payment, get that increased cash flow, and go that way. So within 7 days of receiving the mortgage counseling certificate, we can go ahead and start the process. We'll complete the application, we'll go ahead and order an appraisal, we'll collect documents pertaining to the reverse mortgage itself, and then present that file to the underwriter, and if they approve it, then we'll call you in for closing and set up that first disbursement depending on the type of program that you choose. Okay, and then you would have your reverse mortgage. That is basically it right there. There's more details to reverse mortgage because there's so many different types now in so many different situations, but that's the basics right there. Hopefully that gives you some better information where it maybe will start the conversation and you can find out more about it based on your particular situation.